Huh? Oh, get out. Stay out. Yeah, get out. Sorry about that. That was 2021. We're kicking that out the door. This is the Issues Watch podcast. Hello, and welcome to the Issues Watch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm partner in charge of accounting and auditing at Sobel & Company. These A&A episodes now qualify for nano credit. If you're interested in earning CPE credit for this or other episodes, hit the pause button. Head over to njcpa.org/nano to find out how. As a quick disclaimer, these views and statements expressed herein are my own and not necessarily those of New Jersey Society or Sobel & Company. So, why did I kick 2021 out the door? Because it's gone. This week, though, instead of just doing an update, we're going to do a recap of 2021. While we got rid of it, we're going to talk about what were the top 5 things. These are Brad's top 5 things that happened or came out in 2021 that you have to think about, remember, or just kind of keep in the back of your mind in case it comes up. So, starting at number 5, and why we come up with 5? Because we don't have a full budget for 10, and I only have 10 minutes. So, starting at number 5, in honor of Frank Boudelet, who retired recently, we'll talk about the SPAC restatements. Why is that important? Because these SPACs are an enormous type of entities that came out over the past couple of years that I know that Frank's firm was doing, other firms were doing a lot of work in, and all of a sudden they came out and said the warrants that were attached in there that you're issuing regularly are supposed to be revalued every quarter. All of a sudden, they were hit with every quarterly revaluations on these warrants that they never had before. And the PCOB and the FASB said, how could you never have thought that? And they said, because we viewed them this way. And they said, well, you were wrong, okay? So they were going crazy. They've been going crazy. And you should know that, not because you're going to do SPACs or not doing SPACs or whatever, but you may have warrants and you may be in this situation too, that you should just always keep that type of stuff in mind, okay? And we're talking about equity-based compensation type of stuff. Okay, number 4. ESG, reporting on environmental, social, and governance issues. This was something that the AICPA put a roadmap out on. If you need to try and get a copy of it, you can find it online. Otherwise, I can get you a copy. The Center for Audit Quality is of the AICPA issued a roadmap. Established 5 steps that people should be considering. Establish, assess, design, sustain, and assure. Okay, but this reporting on environmental, social, and governance issues is going to be something big as it relates to you public companies, and that means the auditors have to address them. But we're not just talking about public companies here, we're talking about private also, and those in industry. This is stuff that happens at the public companies and can trickle down. We do a lot of nonprofit audits in our office and accounting for it. And I could see something like this trickling down from the public companies down to nonprofit organizations. I don't see it going as much to the non-public companies or entities, but I can see it hitting some of the nonprofit organizations. Okay, so the next item, let's go with 3A. That's how I can come up with still 5. 3A, the quality management. So the AICPA put out a statements of quality management standards. So let's stop for a second there, pause for a quick second, and just notice the words that I'm using that are a little bit different. We're not saying quality control standards, we're saying quality management standards. Because in their mind, you're not controlling the quality, you're managing the quality. This really does focus more now on all the attributes and the quality assurance within an organization. It's changing the name from the quality control person to the quality assurance person, and it's trying to focus more on a full breadth of quality assurance within an organization, particularly firms, really firms. And the one thing I even noticed, I was at a seminar about this, and I asked the person from the AICPA, is you're supposed to evaluate every aspect of the assurance process as to it relates to quality. And I said, what about CPE? And they said, well, you should evaluate if the CPE is quality and you should have that documented. You can't just sit there and go, look good. You have to evaluate it and document it. So if our people in our office, and we have 100 people, and we're not a big firm by any stretch of imagination, and we're not small, but we have 100 people. We have to sit here and say, okay, whoa, who's going to what seminars? Okay, New Jersey Society is fine. We got that covered. But who's going to what seminars? Because we want to make sure that they're a quality enough seminar and you're getting the education to enhance your competencies. But it's something like that. They also covered engagement quality reviews, EQR. They changed it from EQCR to EQR, which the PCOB had EQR for a long time. We got rid of the C. And during this process, because this was a proposal, the New Jersey Society A&A Interest Group put out a comment letter, and hopefully it got the AICPA to pull back a little bit. And I'll let the Laura and the A&A Interest Group take credit for getting the AICPA to make some changes. 3B, finally, risk assessment is being discussed by the AICPA. The risk assessment suite of standards came out in 2004, 5, around there, and they said, how come you auditors can't get it correct after all this time when we're doing peer reviews? And I and some other people have said, well, if we have this many people who have passed the CPA exam, we're not dummies, and we can't get it right, maybe it's not us, and maybe it's the standards to some extent. And so they came out with SAS 145, hopefully giving us a little bit better direction. My only problem is it's been very quiet about this. I would have thought that the AICPA would have been like, hail, we made the change, but they didn't. I don't know. They've been very quiet with this, and that it kind of bugs me because I do peer reviews, Frank does peer reviews, and this is an area we've been seeing for years that people just don't have a handle on. Don't know why. We try. We've given seminars on it. But a couple of things that were addressed in it, of course, revised requirements to evaluate the design of the internal controls. And understanding internal controls is one of the most difficult things. I recommend in our office that we hire somebody who has internal audit experience because they understand internal controls better than us auditors. Finally, one of the things I'm happy about, separately assess inherent and control risk. The previous standards, I felt, did not give enough clarity to inherent risk, and that's what people miss a lot. And then there's a lot more. If you look at my page, I've got a page and a quarter just on some of the hot topics that it hit. But the one I love, they came up with, the AICPA came up with a stand back provision. Stand back. I said in a prior episode, that's like when my father was about to do something dumb when he was ready to kick the TV to get it to work better. Stand back provision. AICPA, we got to come up with some better phrases. Okay, two more. Accounting for government grants and PPP accounting. That was big. They put out ASU 2021-10, government assistance. If you received ERC, not PPP, it's separate. If you received ERC or other government grants, please go and look at guidance, okay? And lastly, number one, lease. It still keeps going. And what's important, they came out with two pronouncements, 2021-05, certain leases with variable lease payments, 2021-09, discount rates for leases that are with non-public entities. If you have leases, who doesn't, right? If you have some sort of lease arrangement, you should be going to look at this. Why am I picking the leases as number 11111? Because it's effective now for calendar year companies. If you haven't started it, get it going. If you need information about this, give me a call. I'll give you some information about what people are saying about it. And two things real quick to remember. The audit report is changing. Even if you're in a private company and you get an audit done, ask your auditor to show you what the new audit report looked like. You don't want to have this miss, especially if you're an auditor and somebody comes in and does your peer review and realizes you didn't update your audit reports. And finally, along with the audit report changing, the engagement letter should have changed with it too. So those are the big items. I went through them really fast. I apologize, but I only have a certain amount of time. So, in closing, I'd like to highlight a couple of upcoming NJCPA events that you might be interested in. On February 8th, I will be presenting a 2-credit compilation and review update in person. Let's hope it is for now. In person for the Passaic chapter. Missing you guys over there. And on February 18th, Frank Boudelet, Frankie B and I will be presenting a 3-credit ANA update webinar to replay on February 23rd. Go to njcpa.org/events for more information on these and other events. And as always, I recommend that you join the NJCPA Accounting and Auditing Standards Interest Group by going to njcpa.org/groups. Thank you for joining us. I miss you guys, and welcome to the new year.